Morning, everybody. This is Max Farrell from DexFXMarkets.com. Today is April 17th, 2019, and this is the Trading with Dex webinar that we hold every Tuesday, Wednesday, and Thursday. Today being Wednesday is hump day, and we're about to embark on a little trip here in this webinar today. We're going to talk about timing. We're going to talk about percentages, success rates, the failure rates, all that kind of good stuff. We talk a little bit about that today. We're going to try to get you in the right headspace, what to expect. If you're going to be watching this webinar live and you're in the room, thank you very much. There's a handful of you in there right now. We really do appreciate you being here. You should get an email every day with the details to this webinar. If you're not, please write me. All right, let's get started. One of the things that I've really come to accustom to, and we kind of, before we started the webinar, Thor and I and Paul were in there talking about a good balance of participation. Now, you go through all this great detail, and if you're doing physical trades, okay, let's just say you're doing physical trades, and you're using a time frame of, say, 5 minutes, or the 15-minute chart. It doesn't matter what kind of chart you're using, right? The idea is that the lower the time frame, the more chaos there's going to be. Okay, I want you to remember that. The lower the time frame, the more chaos there's just going to be, or more movement there's going to be. And the movement of the market always seems to be more chaotic, especially if you're trading on Nadex, okay, around the expiry or the top of the hour. Okay. There's always this major movement that happens at those top of the hours, 1 p.m., 2, 3, 4 p.m. And the market will seem to spike a little bit or down a little bit at these particular times. And that's a reason because there's psychological battles that happen at these timings, whether it be the opening of particular markets or the closing of particular markets. Something's always happening around these times. These expiries also that are on Nadex are picked by the market makers. Okay, these were suggestions that were given to the contracts were made available for these, and then they were etched in stone through Nadex by the market makers. The daily signal or the daily statements. Listen, Nadex has a tremendous amount of statements that you can take on to. It's not just about having Forex. There's commodities, there's indices, there's a lot of stuff in there. There's even Bitcoin. So why does the market move so much at those times? Is because it becomes a psychological battle for people at these particular times. Now, we can't, because Nadex is a derivative network, that's what the D stands for, is a North American Derivative Exchange. And a derivative means that it doesn't actually touch the market. It would be like if you go to a horse race and you sit at the horse race track or a horse track, and you sit in a little box that's inside the horse track, and you make bets with the company's intention and odds and all that stuff because it's their track, right? This is Forex. This is when and it doesn't really have a centralized area you could go to trade. You have to actually deal with a broker that would be inside the building or dealing with the building, or you'd be sitting in a little offshoot here of a building that would communicate directly with the horse track, right? But then there's off-track betting, where another building sits across the street and it uses binoculars to see who's going to win the race. And it says, okay, listen, horse number one is going to, if that one wins, we'll give you 5-to-1 odds, right? And it doesn't actually give any of the money to actually the Forex network. So it can't influence. Like the odds that happen at the horse track happen because of the horses and information and what they have. So they kind of copy the odds. I hope this makes sense. Maybe be a poor analogy, but it's still the same kind of idea. So this building, this off-track betting would be sort of a derivative of what the regular horse track would be. But it still follows the same premise that at the top of the hour, there's a lot of psychological movement that happens. When this happens, we begin to, I guess, react in a particular way when we see a trade. We talked about this a little bit yesterday of our reaction of a bar that would be completely red right after one that'd be completely green, right? If you had this one and another bar came in and it was completely red, if this was green and this one was red, and you just had the gumption that this bar moved up and it's all going with your direction, and all of a sudden, a couple minutes before expiry, if it was right here, it really dropped down. And if your statement was right here, or even right here, not this one, but this one here, it would actually make you feel, I could possibly lose this. The closer you get, the harder it may be. And then all of a sudden it starts to bounce back up and it does its thing. And you go, okay, great. Thank you very much. And take my win. But you don't know what you don't know here at this level. What I try to do for me personally, and it doesn't work for everybody. If you're a scalper, you need to be hands-on. You'll be looking at, maybe if you're in a 1 hour trade, you should be looking at about a 5-minute chart. If you're in a 2 hour trade, you should be looking at a 15-minute chart. If you're in a 5-minute trade, you should be looking at a 1-minute chart. And if you're in a 1-minute chart, you're not in any of our systems, go away. But the concepts are still the same. You look at the amount of movement can't really be dynamic. You can't look at it finitely in a molecule, per tick trade. Okay, I went down 7 ticks, I got to get out. Scalping is a fine art. Paul is able to do it very well because, again, he has 5 years worth of experience in there, seeing what the markets are and how they work. When you trade in 5-minute trades, especially like on our 5-minute system, you have to be well prepared before and after the trade happens. Excuse me, you really can't get into the trading mentality of per tick trading, right? This is why we tell you in 5-minute trade, get in the trade and let it expire. If you're doing a trader's mind theory system, okay, that's something different. But in the case of the regular 5-minute trades, we tell you to prepare yourself to get in for a particular amount at a particular time to get in and let it expire. This same advice transfers to the other time frames. A 5-minute trade or 5-minute chart for a 1 hour trade. It's the same kind of mentality. Get into the trade and let it expire. I wouldn't be distracted by Paul's scalping and choke ups and all that just yet. That's an advanced way of trading. And you don't get there by simply learning how to scalp, because you basically, excuse me, you already know how to get out of a trade, whether it's losing or winning. You got to learn from the position of doing it one way first. And then once you get that down, learning how to temper your trade just a little bit more. Does that make sense, Paul? I mean, is that something that, because that's what you did, right? I mean, you started doing it with the solid foundation of what we did, and then you began to tweak it as you went.
Yes, that's exactly what happened.
But what he was gathering along the way was a lot of information about the market, about the pairs, his time frame. Remember, Paul trades at a different time frame than most of us. He's overseas. He's in New Jersey Islands. New Jersey Islands. I just said New Jersey Islands. Oh,
Jersey Channel Islands.
Jersey Channel Islands.
Yeah, UK.
Yeah. And New Jersey Channel Islands is something different. Sorry.
Yeah, that's all right.
Channel Islands. I'm sorry, my cold medicine's messing with me today. The thought of watching the trades also begins to kind of affect you just a little bit too. I know, Paul, you like to watch the trades, and Thor, you like to really watch the trades because you deal with a lot of spreads and stuff.
Yeah.
For me, I can't. I've been doing this long enough now that if I begin to watch the trades, I find my mental state becomes changed throughout the day. I feel like a nervous wreck when I get up and leave. I have to take a sort of step back and take a macro look of the entire day and not of the finite little particles that happen throughout the day. When I was trading 50, 60, 70 times a day, I was a nervous wreck. I once did 92. I did 140 something trades and won 92 92 trades in a row. Out of 142, I only lost 7. And in doing this 142 trades, let me tell you, again, I was a nervous wreck because I was getting into trade after trade after trade. And by the way, this was done in like 2 days. It takes its toll on you. To watch the trades per tick, you got to be careful. You also can't be too blasé either. You can't just be, oh yeah, there's an arrow, and then an hour later decide, okay, well, there was an arrow here, so it still has to be going up. No, it's all about timing. And we'll show you that here on the TNT charts. Once you get the concept down that getting into the trade, we have this statement here, learn how to make it before you make it easy. Does that make sense? It's all about getting down the proper procedures of what you do to trade. Whatever your flow is taking that time. Okay, any questions at this time? No? If you do, please come out and chat. And if you want to talk, you can say, I'd like to talk or ask a question. Let's go over and we'll share a new screen and we'll go over to my screen and let's have a look at the dailies. We're going to just kind of go through this just real quickly. Eduardo made a statement here just a little while ago that we finally had a loss after so many trades on the dailies, and it's absolutely right. There was some major stuff that was happening late yesterday in the Aussie world, I'll say. The process being that there was a, where is it at? I got to look at it now. The JPY had a tremendous amount of news that was happening, and of course it affected that process, also curtailing the Australian dollar as well, because they're closely knitted, also with some oil exports that were happening as well, because the AUD USD is a commodity pair, which means that it is affected by that country's commodities as well. So oil, sugar, gas, all that kind of stuff affects their currency rate. So you always have to keep that in mind when you're trading. It's one of the most volatile pairs of standard pairs that are there. That being the Great Britain pound USD is usually affected by a lot of the commerce that happens in Great Britain. All right, so why was this such a big deal? Well, because if you go back 415, there's a lot of wins in a row. And again, you know, this system isn't about perfection, right? We have an overall success rate of 96.1% lifetime of all signals. The best one that's sitting out there in lifetime is EURGBP. Come on, you have to have some sort of love for this breakdown of information. That's 28,000 signals. 28,000 signals with a success rate of 96.1. Excuse me. So the concept is that if you start looking at the process side of the dailies, this should give you a feeling that the idea of success that you can commit to is right in front of you. If we jump over to the ATMs, of course, when a pair loses, of course, on the ATMs, it loses as well. But look at this success rate. This is sitting at between $35 and $40 per profit for each trade that comes up. And each one of these would have fulfilled. If there's ever a filling, because now not all ATMs fill, but not, but that doesn't mean that this is the only dailies that would have won. The idea of the dailies themselves, my dog is not liking that trash truck today. If you think about it, the market is we know this drawing here, the high and the low, the market pierces out. We then use the low number here. So when the pair pulls back, a daily will fill between 10 and 20 pips close to expiry, somewhere in here. And it changes per pair, per market maker, per the market structure, expansion. There's a lot of things that the market makers take in advance or in consideration. So it will fulfill between 10 and 20 pips out. And usually fulfill if you have like between $20 and $25 on for profit margin. Okay. the ATMs fire once the price drops down close to 10 pips to the statement price, okay, to the open price. Once it gets to 10 pips, within 10 pips, this ATM fires. Okay, so even though that all these ATMs would have been fulfilled, it doesn't mean that this is how many dailies would have filled. There had been more dailies that it would have fulfilled. Does that make sense? Somebody asked me the other day, why don't you just fire off the signals that would have fulfilled? And I told them, because it's data. It's strong working data that is fulfilled in a process that we commit to a flow. And then you have to find out, where do you fit? So look at this chart for a second, and I want you to tell me, and this is pretty big for you. I mean, if you're learning how to trade and you're learning on the system, we haven't even looked at the chart yet. But let's just say that you decided to take every single one of these. Every single one, knowing, okay, let's look at that. 1 second, let me go up and hit clear. Clear our drawings, clear that. If you decided to take every single one of these, we'll go back out to 100. And how many are here? Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 25, 50. There's 61 trades here, okay? And there's 61 trades. Out of 61 trades, there was 4 losses. Let's look at that just for a second. You knowing that every single one of these fulfilled, right? You had 61 trades, minus 4 is 57 wins. 57 wins times, and remember, they're going to fill anywhere between $30 and $35, but we're just going to be conservative. We're going to say 30 bucks, right? Wait, did I do that right? 57 times 30 equals $1,710. But you had 4 losses. Now, if we did 30 on the one side, that means there's 70 on the other. So that's 4 times 70, so minus 280 bucks. You understand? This is about data. If you just went through and did every 11 o'clock one, how many would you have won and how many would you have lost? Start researching that. Find your Jacob's window or Einstein window. Jacob's window when you're under the water and you look up. Find your Einstein window. Maybe you took all the 2,300 ones. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 wins and 3 losses. 13 trades, 3 losses. And you can figure that out for yourself. You know, that's not that great of a success rate, but still, if that means I won 10, that's 300 bucks, and I lost 3, which would be 210. So you would only made about 90 bucks off of those, but you would only traded, 10, 13 times. And again, that's only one contract at a time. And for less than a week. This is only just over a couple of days. Start using the data that you have in front of you. OTMs, I probably really, yeah, you're going to get in for an OTM for like $10, $10 to $20. Even if you got it for a risk of 20, you're winning $80. You understand? So if you look at these, 1, 2, 3, 4, I won, say 4 times 80, right? So 320 bucks. Then I lost 20, so 60 bucks. So, but you're still ahead. The numbers work. Whatever your decision is, if you're trading dailies, if you're trading OTMs or ATMs, this is something that you can keep an eye on. And once you get that idea, then you stay with it. Maybe you trade some of the dailies, you see what comes up, you get onto the ATMs, and you stay with that process. Does that make sense? Let's go over to the TNT charts, and I want to show you a couple of quick examples just to make sure that you guys got this down. You know, the TNT strategy was that we're looking for trend. Don't be lazy with the arrows. Just because this little part here is pushing down just a little tiny bit, that does not make this a downtrend at that time. Once you get down to this point of piercing and it gets down below this area and it has an arrow, I would then start looking at this as a downtrend at this point. Then once you get some retaliation to the process, we got negation that happens here. Now at this level, I would consider this a downtrend. So the very next down arrow would be my signal arrow. Nothing more, nothing less. I'm not going to also wait until hours after the fact to get into the trade. I either get in at the arrow or I don't get in. There was a someone in the group that showed a trade that there was an arrow like an hour or so before, and then they had gotten in. Well, there was an arrow there, but it was from a couple of hours ago, but I got in anyway. That is the wrong mentality to have. This is all about opportunity, and the opportunity has well passed at that point. You wouldn't get in here and say, okay, well, there was an arrow a couple of hours ago, and I'm getting in on this one because it has a down arrow, and it goes with the trend. No. The concept is simple. Once you get the negation, when the arrow appears, that's when you get in. And you get in at that level or at the structure, okay? If you're trading this on Forex, you better be very, very careful of putting in after the fact, too far after the fact. I wouldn't get in more than a single candle away from where it came out. Let me see if I can find something that shows that effect. There's going to be a lot of good setups here in about an hour. EURGBP. Now, also timing your trends and your arrows as well. When you get something like this, where you get this downtrend starts to happen, we start depicting it as a downtrend right around here. We get some negation. The arrow pops up for negation, 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 but then we get crossover. And once this happens, this is an over-under strategy. Did this confirm to be over-under? Yes, because it pulled away from the EMA and it hasn't touched it until right here. This would have been something that I would have probably looked at, but I would have looked at for an arrow to be above. And it would have been here because remember, it's this bar that would be over the close, right? So, but again, if you're going to trade a strategy, you've got to trade it all the way. So would you have lost this trade? And the answer is yes. I would have actually no, I wouldn't be out yet. I'd be down at 126.47 and probably get hit with this bar right here, making sure there's just no news as well. But again, would I trade this concept now? Like if I'm just seeing this right now, would I have gotten into this trade? And the answer is no, because it would have been too far away. 1, 2, 3, 4, 5 bars away. I wouldn't be getting in. Let's see if we can find another example. Nope, lots of craziness. USD CAD. Now this has all been news generated, so again, you don't want to try to fulfill a trade just because you need something on. Now this is a pretty good, excuse me, staggered uptrend where we get this piercing that happens, and it becomes very, very distinct that this movement starts to happen with a verb to go past that EMA as it comes up, at these particular points, this trade, you know, if we deciphered that it was an uptrend right around, we got negation here, we wouldn't take this arrow because it would have been a double arrow, right? If you were looking right around in here and this arrow came out, would you have won? And the answer is yes, you would have won. Because remember, if you were trading on Nadex, you would have got back to a statement of 1.008 0 or 82 net factor. And then 12 bars later, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Definitely a win, right? But look, this is a classic setup. The arrow appears above previous high. This has been a beautiful setup. If you came to the market at this area, would you have been like, okay, I can still get in? No, I wouldn't have gotten in at that point. I want to be at the moment of the process happening. I don't want to give myself any opportunity to go, well, maybe I shouldn't have, or I should have, or maybe. No, follow the rules. If another bar comes out with an up arrow, you want to see it creating, because it's sort of still creating that higher high along the way and that higher lows along the way. This is almost a perfect process. And you could disvalue some of the ones because look what happens. This low is here, okay? And it kind of, this is sort of maybe a fake out low because this one sort of sets the tone still higher than here with a massive low. So it still kind of continues on. And as this negates to come back, if we get to this area right here and we still got a little negation, but it's committing to it, the next up arrow I would get into. But it could also go flat. All right, let's look at the USDJPY. And again, when you get a lot of chaos that happens, and yeah, it kind of looks like a downtrend, I'm not going to mess with it. I'm looking sort of perfection. I got one idea. I got one pattern that I'm looking for. And what is that pattern? I'm looking for a big push in a particular direction. I'm looking for a good trend to be set up. I don't need chaos. Now, if you find that, this is a over-under strategy, boom, this, within one arrow away, there it is. Come back up here. 71.97 is the statement. 71.95, so that would only been like 10 pips. This is a big win. If you're trading, because you would have gotten in right here. Oh wait, no, right here, 71.85. If you would have traded this on Forex, you would have immediately, because you've only been 10 pips away, 84, there it is right there, 74, you would have moved up to break even, and now you would be in the money. You would be in money right now. I love trading this system on the process. Now, this is a over-under strategy, but it gets broken right here, right? Because it touched and it closed. It went down. It closed over the line. And again, there's something happening here because there's just too much information for the system. It's too small. You can see that there are closes over the line. I probably wouldn't have gotten into this trade as an over-under. Let's look at the Euro Great Britain pound. Again, a good establishment of a trend. Get a little bit of consolidation that happens here, but then we reestablish as the process moves up right here. So if you establish that it is a trend right about, you get a little pullback right about here, because that price is above the arrow. You get negation here. This arrow right here is the one that you would really be looking at as the money maker, right? You would have gotten in at 86.49, 86.50 in that area. And 12 bars later, you got the win. If you're trading Forex, you would have came down to structure, set your stop loss at 86.40. That's about 10 pips. Again, every 10 pip movement, you move your stop loss up 10 pips, boom, boom, boom. And if you really done it right, you did that, if you were watching the market and you watched your process, 86.50, 86.76, 86.80. So you would have been down at 70. You would have got stopped out right about here. So 86.70, you would have got stopped out at. And that's okay, because you just made 20 pips. And if you just traded a statement, you would have made however much you made per contract. Trading at the money's like this, really close, maybe $30, $40. Pretty powerful. All right. I really got to go take some medicine. I know that if there's any questions in the process, go down the list. Go down the list every day, every hour, you know, if you have to, every hour. Back to your computer, sit down and take a look at the market. Remember, you're looking for trends. See if you can depict a trend. Sort of starts to go down, get negation. Where does the trend start to establish itself in this one? This arrow right here? You're absolutely right. Start seeing where that can happen for you. Start noticing that the pairs get the arrows on, you know, at particular times of the day. There's one at 9, and this is a 5-minute chart for a 1-hour trade. So they're going to be on the hour every hour. Not every chart's going to have an arrow on it, but they have the potential on the hour every hour. Understand? So the 2-hour trades, because of the daylight saving times and a switchback and all that stuff, the arrows for the 1-hour trades are on the even now until we get the EDT again, and then they'll be shifted back to the odds. So on the even hour, so at 12 o'clock, at 2 o'clock, at 4 o'clock, you have the potential of committing to a signal arrow, right? So in something like this, you can kind of commit to an uptrend. Again, you're waiting for negation to happen, and the next arrow afterwards, if you had an up arrow, anywhere in this, I wouldn't have touched anything with this, not even here. Even if I got to this point, I probably would have gotten into an over-under at this point. It's been a classic setup. But remember, you only have to come, you know, if you come back on the even hour, you can look at all kinds of things. You can look at the 1-hour trades, you can look at the 2-hour trades. Set yourself a file going, you know, that tells you, or even on your calendar, all right, well, I have a pushback here. So at 12 o'clock, where are you going to be at your computer? You can be right here. You're going to be watching this particular trade. You're going to say, all right, the euro is going to set up. I have, we came in the beginning of the hour and this negation happens. What are you going to do in an hour? You're going to be back at your computer like 5 minutes to the top of the hour, waiting to see if there's a signal pops. And if a signal pops, what are you going to do? You're going to get in. You're going to test the format. You're going to get back to structure. You're going to find the statement. And if you can't find a statement, you can't find good structure, and if it moves too fast or what have you, don't get in. It's that simple. Max, it can't be that simple. Yes, it's that simple. Start practicing with this TNT strategy. Start getting into your pocket. Christ, even if you don't trade it, learn it. It will help set disciplines for you like you'll have no other. This is even better than the trader's mind theory. It gives you discipline. It gives you flow. It gives you structure. It teaches you about one of the most fundamental and underutilized ways to trade is with price action. And that's all these arrows are. It's all about price actions, about movements, about depicting these moves. Okay, any questions? Let me see what if I could do this. I'm gonna pause share for 1 second. I'm gonna go into, I should have these like on just like a button click. I don't know if you guys seen, we had Paul Davey has just been, resume share, been really just taking it to the mats here, man. And I can't thank you enough for all the hard work you do. You and Thor are like my godsends. You guys work so hard to get these trades on and do what you're doing. To be at these numbers, it's incredible. Absolutely incredible. Schoolboy, I like how you always do that. You always say, okay, it was a schoolboy error. And I appreciate that. But he scalped out knowing that it was going to be painful, whether or not it was going to be for a win or for a loss. He didn't scalp out. He let it go to expiry. But lesson learned. But you've earned your right to decide whether or not you want to keep it or not. That's up to you. Okay. So the concept here is, look at this. This is incredible so far for the month, being what it is. We talked about this the other night. God, I got to keep scrolling. Holy crap.
Yeah, I think I need to make another page.
I think so, but I'm fine with it all being on here, because that's an incredible amount. That's $7,453 in less than a month, in half a month. Today's the 17th. Come on, guys, 2 days off a month, off a half a month. That's a $14,000, $15,000 a month if it was done correctly. If it was done the same way, if you just happened to step and repeat, a $14,000 a month. How many hours a day do you work at it?
Probably a couple of hours. Well, per trade, probably as soon as it's on, that's it. So it can vary between sort of 2-3 hours to 5 hours. It depends what I'm looking for and what I've got on at home.
Wow. Well, that's a hell of a living. Paul, thank you very much. Appreciate it. Thor, thank you very much. Earl asked me to go over the OTM and ATMs again. I'm not sure what you are referring to. I went over them pretty detailed just a couple minutes ago in the process. I would love to do it again for you, but I'll have the recording up and in and delivered to everybody. It'll be on YouTube tonight or this afternoon. If you want to rewatch that, they're very simple to follow, Earl. So if you have any questions along the way, you can reach out and chat and go through that process there. I'm really not feeling very good at the moment, so I'm trying to keep it all together to do it. And I need to go take some medicine and maybe get a cup of tea. But you guys have a great day. I really do appreciate your time and you being here. Please let me know as you go. Before I go, I have to tell you right now, I see some names that are in the chat. I see some people that are here. But let me tell you something. If you are trading right now and you're not in the step bot, then you got to kind of ask yourself, what are you trying to accomplish? You know, yes, you can trade. You could do as well as Paul is doing, but as that is happening, these things are happening. Okay, these things are happening. I mean, that may not seem like a lot of money to you, or maybe this one does. Give me 1 second. But I want to show you what's happened with Mr. Gary's account and why it's going parabolic now. Just today, $716 in one day. Why is that? Well, because he has $28,000 in his live account. And I know that you're like, well, Max, I don't have $28,000. No. He started with 25. And he's put $3,600 in this year. This month alone, $1,675. If he doubles his month, that's $3,200. He'll almost double his yearly earning in just 1 month. And why is that? Well, because if we increase 1 micro lot per 1,000, he's almost ready to increase almost every 2 or 3 days. He can increase a micro lot. This thing now is going to go so far up into the equity curve. It's no longer going to be a curve. And then we see this happening in the data when usually about the first or second year, it's slow going, right? Usually in the first or second year, most of the systems kind of look like this, right? They almost look exactly like this. And then all of a sudden, so this is year 1, this is year 2, and then right about year 3, this begins to happen like this. And then year 4 happens, and then it just goes like this. And it happens in this fact is because the increments that happen along the way are slow. They're because this is $0 profit, and this is 1.5, 1.7 million, right? So as this starts to happen, it gets really parabolic right around this time of 1, 2, 3 years. And it's usually when it hits, because he didn't start at 2000 like we would, right? It would take about a year to get to this point, right? Year and a half to get to this point. That's why we're seeing from right around here, we're starting to see this movement that's going to be going like this.
Max, at that level, he would be probably increasing his lots 1 lot at a time about every 10 days.
Yeah.
Yeah, it's really starting to accelerate for him.
Yeah. And being that he's on Trader's Way and he has a 1 to 200 leverage, I told him that he can almost do 2 lots per thousand because the leverage is so high. He pays a little bit more in interest, but he would then take this almost in a double fashion to be able to really then it's going to accept, not that it would turn around, but the idea is still the same. I mean, you know, because he has a little bit more. Now, if you're a Oneida or IG customer, you have a 1 to 50. You got one micro lot per 1,500 that you want to kind of stay at and be very, very careful with that process. Too much of an increase, you're going to leverage out in that process. I also have a customer, and I got to tell you, you have to kind of think that when you have leverage, even this 1 to 50, you pay interest on this. You know that, right? When you keep a trade overnight, right? So if you get into a trade, say at 12 noon, right? 12 noon, 12 p.m. And you carry it over the day between after 5 o'clock, right? The market closes or what have you, right? You keep it over what they call overnight, right? And you borrowed this money. Basically, you borrowed money to give to somebody. They make interest on that money. Now, in some cases, Oanda charges per second that you have it over overnight, right? So that interest that is made can either go with you or against you, right? So if the company loses money, they send part of it, one, you know, the whatever leverage you have percentage wise, you pay that, you help pay that. So there's a percentage rate, there's an interest rate that gets paid. And I'll show you what it looks like. Here it is on, let me see if I can pull this up here. All right. We'll go to history. I don't think it shows it on this one. Let me see if I can go to. Okay, so here is, all right, see where it says financing here, balance 0.03. We made 3 cents on this because we kept the trade overnight, and the main company, now this is Oanda, they made money. So they paid me 3 cents for having the trade. Here it is for, I'm sorry, financing, and they charged me a penny, right? Here it is, and I made a penny, lost a penny, made 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 a penny. Okay. So when you see financing, sometimes you got 2 cents, 3 cents, 4 cents, depending on how many contracts you're using. Here's a minus of 18. Oh, that's about a different trade. But every time you see financing, that's what it is. Okay. The other is that if I go here and I go to, I'm using Traders or Trader's Way, the swap price is what I get charged on when it stays overnight at that point. Okay. So here's 9 cents. Here's 13 cents. Remember, because we have higher leverage, we pay a little bit more in the swap. Okay. Higher leverage means more on the swap. I can't show you what it is on Mr. Gary's, but I know that it can be considerate. I mean, if you think about it, he's 20 times what we spend. So if we're being charged 10 cents, he's being charged $2, right? Or even $4. But he just made $777. Think of it as like borrowing money from your cousin that you got to pay back something to, you know, and it might be only a couple of cents, but you just made $500.
As I understand it, it's basically the difference between the interest rates on the 2 different currencies. And sometimes it pays you and sometimes you pay it.
Correct.
On what the difference in the interest rates are.
So yes, but it's
you gain money and sometimes you lose money.
Yeah, but it also takes in consideration your leverage amount too, and how much you're borrowing against it. On the 1 to 50, you're not borrowing as much as you are as a 1 to 200 or 1 to 500. So it doesn't increase on that level. But it is the difference between the 2 pairs. You're absolutely right. So if they win money, they share it with you, and if they don't, then you pay the dividend. Hang on, Chris. I'll bring you out real quick because we're about to wrap up. Hey, buddy. Should be able to come out now.
Hey, Max. Morning, everybody.
All right. So, and isn't wrapping up here. If you're a member, if you're a paying member, and you paid an all-in, or you bought a Forex side, if you bought a Nadex side, we can talk. If you need a step bot, we'll get you something. We'll figure something out. Just write us. Let us know what you need. Secondly, if you're not using this step bot system, you don't have a diversified portfolio. You need something that's long-term. Trading is short-term and mid-term. You got to get something long-term. Save your pennies. Like Chris told me the other day, I would collect cans to make this work. Absolutely. I was speaking to some college kids and I made that reference. And, you know, Chris and I were joking about it because we probably would never go collect cans. I mean, yes, if it was a apocalyptic world, I'd probably go collect cans. But in their cases, it made sense to them. We even joked around about giving plasma. And those kids there were like, I already did. That's how I got my beer money for the weekend. You know, I was joking around with one of the college kids in a video game. We're talking as we're going through. And he goes, how much do you pay to be an affiliate? I said, you don't pay anything, but we pay you 40% of everybody you bring in. And he goes, oh, one-time trades. Yeah, or one-time sales. They're pretty good. I was like, no, that's recurring. He goes, so if I get 10 people, you're going to pay me $400 a month? I was like, yeah, absolutely. And he signed up almost immediately. So looking for extra money, it's a way to get it. Chris, you got anything to add before we head out?
No, nothing to add except StepBot is definitely an investment. It's the way to go. Hopefully folks can take a look at that.
One thing, the step bot right now is in neutral. There's no positions open. So if you've been trading in demo and you want to go live, you've been waiting for a chance to go live, you want to activate your live account now.
Right. Absolutely right. There's a handful of them on there, and we send out a message with it as well. All right, everybody. I'm Max. This is Dex. Thanks a lot for being here today. Thanks to Thor. Thanks to Paul. Thanks to Chris. We'll talk to you all soon. This recording will be up on YouTube by the end of the day. We'll probably put an email out to everybody as well with it. Just to kind of talk about some of the talking points in here. But you guys have a great day. We'll talk to you all soon. And as always, trade well.
Thanks, Max.
Thanks, bud.
Cool.